NIO has undeniably been making waves in the stock market, closing 2023 on a high note with a surge in prices. Positive events, such as the much-talked-about NIO Day in December, where the premium ET9 vehicle model was unveiled, played a pivotal role in boosting investor sentiment. Adding to the excitement, Abu Dhabi-based CYVN Holdings recently invested a substantial $2.2 billion in NIO, marking their second strategic move after a $1 billion investment last summer. But with the recent dip in stock prices and concerns about growth, is NIO more than just a car, and is it a good investment?
Of course, Tesla is a company that I have a lot of respect for. Of course, they've achieved so much, but NIO does not want to be another Tesla. What we want is to build a community that starts off with the car, where the customers can share their joy and grow together. Even though we make a premium smart EV, we want to give users changes in their life that's more than just a car.
NIO CEO William Li shared insights in a 2023 CNBC interview, distinguishing NIO's vision from being another Tesla. While acknowledging Tesla's achievements, Li emphasized NIO's focus on community building, beginning with shared joy among customers. Despite being in the investment stage, NIO envisions a long-term strategy, anticipating revenue from service demand in a car's later life stages. Li acknowledged the industry-wide challenge of the chip shortage affecting various car components. NIO plans to expand into European markets, with Germany as a key target. The appointment of a Europe CEO reflects the commitment to meticulous planning and patience for this long-term venture. Contrary to short-term sales goals, Li highlighted user satisfaction as the top priority. For instance, NIO's emphasis on ensuring the happiness of initial users in Norway during the third quarter demonstrates this commitment. Li emphasized that user satisfaction, not immediate sales, drives their strategy. Discussing the competitive landscape, Li recognized the strong momentum in Europe's EV market, with major brands like Volkswagen, Mercedes, and Audi making significant strides. Despite the challenges faced by Tesla in proving itself in this market, NIO remains realistic about achieving a decent market share, acknowledging the lengthy process required for such an endeavor. Fast forward to today, NIO created a buzz in the market with strategic moves, starting with unveiling their premium ET9 vehicle model at NIO Day in December. This unveiling marked a pivotal moment, showcasing NIO's commitment to innovation and cutting-edge technology. Following the ET9 revelation, NIO doubled down on its infrastructure game, launching the latest iterations of its power swap station and power charging technology. This move wasn't just about unveiling a new car model, it was a comprehensive step towards addressing the evolving needs of electric vehicle users, making charging more efficient and accessible. However, the real game-changer came with the substantial capital infusion by CYVN Holdings. Their $2.2 billion investment injected a powerful dose of confidence into NIO's financial outlook. Investors saw this as a strong vote of confidence in NIO's future prospects. Now, NIO's stock witnessed a notable rally following these developments. The unveiling of the ET9 and the subsequent improvements in charging infrastructure fueled investor optimism. The $2.2 billion capital raise added to NIO's financial firepower and demonstrated the company's ability to attract significant investments. As William Li mentioned earlier, competition in the electric vehicle space is fierce, and a critical aspect is how NIO's growth stacks up against key competitors like Li Auto and Tesla. Looking closely at the growth rates, NIO has shown promising figures. However, when compared to Li Auto and Tesla, concerns arise. In 2023, NIO reported a delivery growth of 30.7% for the full year, a notable achievement. Yet, Tesla, a global EV giant, and Li Auto, another strong player, have reported more robust levels of growth. This raises questions about NIO's ability to outpace its competitors and become a dominant force in the market. The analysis extends beyond delivery figures to gross margins and ongoing operating losses. While NIO has undoubtedly made strides, it's crucial to acknowledge that competitive pressures impact its financial metrics. Lower gross margins and persistent operating losses suggest that, despite growth, NIO is grappling with profitability challenges, a factor that investors closely scrutinize. The significance of being considered the Chinese counterpart to Tesla carries both advantages and risks for NIO's valuation. On the positive side, being associated with Tesla elevates NIO's standing, drawing attention and investment. Investors often view NIO through the lens of its potential to replicate Tesla's success. However, this association also creates expectations that NIO must meet to justify its valuation, and any perceived lag in achieving Tesla-like milestones can result in skepticism. Meanwhile, NIO stock faced a notable shift in sentiment as Bank of America decided to downgrade it to a neutral rating. This decision was driven by concrete reasons, primarily the company's lower-than-expected sales growth, a key metric investors closely monitor. The downgrade was influenced by Bank of America's anticipation of hurdles in NIO's sales trajectory for the first 3 quarters of 2024. The bank's analysts foresee challenges that might impede NIO's ability to maintain the growth momentum it had seen in recent periods. This concern is substantiated by their expectations of a potential slowdown in volume sales growth, signaling a cautious outlook for the company's near-term performance. In contrast, Goldman Sachs took a different stance by initiating coverage of NIO. The analysis from Goldman Sachs highlighted potential cost tailwinds and margin improvements as key elements for investors to watch in 2024. However, this positive outlook came with a set of concerns. Goldman Sachs expressed apprehensions about NIO's declining market share and a relatively smaller pipeline of new models compared to its competitors. This recognition underscores the importance of continuous innovation and market presence in the highly competitive EV landscape. But before we continue, we just want to thank you for watching this far. So, what can we anticipate for NIO's future based on analyst insights and recent developments? Analysts are expressing a positive view on NIO's sales outlook, particularly for the fourth quarter of 2024 and into 2025. This optimism is grounded in expectations of sustained growth and increasing market demand for NIO's electric vehicles. One significant factor contributing to this positive outlook is the sizable investment by CYVN Holdings. Analysts believe that this infusion will bolster NIO's current financial standing and pave the way for improved stability and potential expansion of its market presence. However, it's not all smooth sailing. Anticipation looms over increased operating expenses in the foreseeable future. NIO plans to allocate resources towards marketing campaigns and expanding its sales network, a strategy to strengthen its brand and market penetration. While this approach is essential for long-term growth, it comes with short-term financial considerations that analysts are carefully monitoring. But caution is warranted as we delve into the variables influencing NIO's trajectory. The performance of its Alps brand stands as a critical variable, with its success contributing significantly to the overall strength of NIO in the market. Data suggests that a robust performance here could bolster NIO's standing among consumers and investors. Fluctuations in battery prices present another challenge. Statistics show that the volatility in battery costs directly impacts NIO's financial health. Whether these costs rise or fall can significantly sway the company's profitability, underscoring the importance of closely monitoring market trends. Shifting gears, the ever-changing landscape of industry demand is a key factor. NIO's adaptability to shifts in consumer preferences and industry trends is paramount. Analyzing past data and future projections becomes crucial to predict and prepare for the evolving demands of the market. Addressing liquidity concerns is imperative, and the numbers reinforce this. A detailed analysis of NIO's financial liquidity position reveals its ability to weather unforeseen challenges. Investors, therefore, must stay attuned to financial reports, ensuring that NIO remains well capitalized for its ventures. Staying informed about NIO's developments is not just advisable, it's essential. The interplay of these variables dictates NIO's success, making it crucial for investors to remain vigilant. So, do you think NIO can navigate these variables successfully and emerge stronger in the ever-evolving electric vehicle landscape? Drop your thoughts in the comment section down below, and make sure to hit that like and subscribe button to stay updated on the latest from NIO and other valuable investment tips. Moreover, if you want to know more about NIO's expansion to Europe, simply tap on this video link. Appreciate you joining us, and keep an eye out for more thrilling content coming your way.